So let's look at British pound yen. To understand British pound yen, the first thing we do is to look at it from a higher time frame, which is the monthly time frame. And I have key thing I want to note out here on a monthly time frame is a sharp drop into 108, and a peak at 258.44. So this is a demand floor, and I'm gonna put a supply roof, to understand it, you need to be on the line chart to understand that the market is structured. You know, the reason we are aligned with market structure does not lie. It's an interpretation of the structure of the market. So what you see is what you trade. You don't speculate. You don't tell the market what to do. You look at the structure and follow it. If it's selling, you are selling. If it's buying, you are buying. Very simple. It doesn't get any complex than that. So to put it into perspective, you have seen here as a demand floor create an ascending trend line. Break of this ascending trend line, that is demand floor one, demand floor two, followed by a retest, another retest confirmation on the same trend, making it a psychological ascending trend line, running from 2009, 2008, 2010. We came back 2013. We retested 2013. We broke the structure. What structure was broken? A, B, C, D, E. And price return here as a retest count after break of structure. And we return here to retest it, and we are back. So if you are still long on Gbpjpy, it shows that something is wrong with your strategy. You're about to lose money. If you are still long in Gbpjpy, please, I would advise you to come out. You're about to lose your money. You're about to lose money. I'm telling you for free. And this is a high during the GFC era, global financial crisis era. And we have seen it confirmed. You see, the rise of the British pounds and the drop of the British pounds tell something about the financial market and how it works. The 2007 peak of British pound yen from 250, look at it, it dropped from 250 into 100, and that's 118.59. It's not a surprise. It's not a surprise. And if you look very well, the fell has something that was accelerated due to the collapse of the Lehman Brothers bankruptcy in September 2008. You may have heard of that Lehman Brothers bankruptcy, filing for Chapter 11 bankruptcy. It's um, it's very very sudden that the bottom is a part of market arithmetics. It's well structured, you know. So let's look back to see why the British pounds fell so heavily from 2007 into 2009 on a monthly candle. And you can see something is about to happen here. Let us complete this chart to put all this into perspective. You see, price has reacted at a double confluence here at 220, 212. We have seen a very strong confluence, and you have seen that British pound yen is dropping from there on a monthly time frame. Only monthly insight will tell you exactly what's going on in the market. So you can see what has happened here in 2007 during the GFC era, global financial crisis era. Market has created a very strong support structure here. Support structure one in 2006, Support structure in 2007, support structure in 2007 again, break of structure followed by a retest. This is a zone. So technically, the market has gotten to a rejection zone on a monthly TF. On a monthly TF. So look for opportunity and sell British pounds. This is what you have. This is what you have by trading standard on a monthly time frame strategy. So you see, this is the zone of the market reaction. After breakout from the support structure, price came back here and retested. And you can see this is why you're seeing this candle falling. There is a falling knife. Don't let this British pound yen falling knife fall on you. Every yen pair is going to feel it. EJ, AJ, GJ, UJSF, everybody will feel the knife. Everybody will feel it. It's a pain that will come on everyone. So yeah, a lot of guys do not know that the Bank of Japan are one of the few banks that are owned by other people too. It's not completely owned um, by the Japanese government. No, it's partly owned. You know, there are few. I think it's the only few central bank, only few, only it. So it is owned by 55% stake belongs to the Japanese government. Although other shareholders are not given opportunity to decide on monetary policy meetings and maybe change in policy outlook. But in terms of shares, the Bank of Japan is owned, and you can trade it in Nasdaq. You can check the ticker on Nasdaq. I think it's either 8301 or so. So you can check 8301 to trade the Bank of Japan stock. So we look at why this thing dropped from 2007, we from 250 to 844. During the global financial crisis, the crisis began with the US subprime mortgage meltdown and accelerated into full global credit and banking crisis. What really triggered it? Growing losses on subprimes and structured credit products, freezing of interbank lending and money markets, and the September 15, 2008 collapse of Lehman Brothers, which caused panic, massive deleveraging, and flight to safety. So it's important to understand that the sterling GBP fell not because it wanted to fall, but there was a shock in the money market, and everybody feels the impact. You see, when it comes to carry trade, a massive yen carry trade on wind. That's the dominant driver for Gbpjpy. You borrow from a low yield, low interest Japanese yen and buy high yield British pounds. But when there is a problem, risk aversion, you see there's a problem. Carry traders rush to close their position and they put sell, and you begin to see JPY gain strength and start to drop. This is actually what happened in 2007, 2008. So it's important to understand the risk aversion in market, and investors are risk sensitive. So when they see that whatever that prompt them to borrow money from yen to invest in a high yielding British pounds change, especially if Bank of Japan that has been on zero interest, now they are 1%. If they make any change in interest rate, and we see Bank of Japan changing it from 1% or maybe to 1.25 or 2%, it affects carry trade, and you see GBP start to drop. And I'm seeing that the Bank of Japan might have monetary policy intervention. If they're not having it, stay more hawkish changes the tone for carry traders. You know, so it's important to know that when risk aversion explode, volatility spikes. Investors and leverage funds will be forced to close position, buy back yen, and sell high yielding currencies. And Japanese yen intervention, you don't want to get across Japanese yen intervention. When yen is falling, you don't want to come in contact with it. You go check the candle, look at it, look at the drop from 2007, massive drop, price rallied, but it continued dropping into 2009. They tried to salvage the position but got rejected by a structure at this level. And if you look here critically, you'll see that there is something that happened here again. And let's put it at the close of the monthly candle to see why, after we consolidated here in 2005, we broke structure here and continue. I think the barest minimum we can have in British pound yen drop should be here on a monthly TF. There is a falling knife, a bold falling knife. Nothing will stop this knife from falling. I will tell you for free. Sell British pounds yen. For now, I will tell you for free. The fundamentals are kicking against you. We have an ascending trend line acting as dynamic resistance. We have price tapping into another horizontal resistance structure, creating a double confluence in this zone. A double confluence in 2119.638, 212.264. So it is expected that the British pound yen will correct into 197,278. This is where I see a potential buyback at this level due to the consolidation on the monthly time frame. We have price creating here, resistance structure 1, resistance structure 2, breakout resistance structure, return here as a demand floor, technically setting their up for buy position. So it's important to understand the Lehman Brothers crisis and how it helped fuel that global financial crisis, GFC, in 2007, 2008, and the role it played. You see, the money market is risk aversive. Nobody want to lose money. Everybody stay on a conscious note. And another thing we also look at again is the interest rate differential collapse that led to the Gbpjpy fall from 2007 into 2008. In fact, this is the most important. It's not just the Lehman Brothers collapse. The UK interest rates were cut rapidly as the recession hits, while Bank of Japan rate stayed steady and very low. So the interest rate advantage that had supported the carry trade disappeared, removing a structural pillar for GBP strength. What do you see? Carry trade will close position and start to sell. So that was actually what caused the position. Everybody closed long position and start to sell in order to mitigate loss. So risk aversion was part of it, and interest rate played a very massive role in the collapse of British pounds yen. And you have seen price form here and in a head and shoulder pattern, break of a neckline followed by a retest and a bearish continuation. You can see it here. Look at the neckline, break of the neckline. Then by September '07, another candle came to retest a broken neckline, and we have seen a bear drop, a drop consistently. And when you look at the structure of what's happening here, you have an idea. It gives you an overview of what yen is capable of. Nobody should doubt yen. Look at what yen is capable of here. When it start drawing you down, it will draw you down. And price has come to that drawdown area. You can see what's happened here. Look at it from the line chart. You see here as a support structure, resistance structure, resistance structure, support structure, resistance structure. This is a retest after break of structure. Price came back here, retest one and another retest two, and we are feeling a heavy knife under the influence of Bank of Japan. So this is market structure. It is what it is. It's an interpretation of what you have here on the chart. So I think a yen might continue to drop into 197,278, where we see a potential opportunity to buy back. So to look at the summary of the mechanism, you see that risk on environment pre 2007, investors borrow low yield Japanese yen and buy British pounds, and British pounds rise up to 250. This is the mechanism of the rise. You borrow from a low interest rate economy and invest in a high yielding interest, which was the British pounds. And you see the British pounds, rose. This chart is not complete, but it rose up to 250. And then the risk of crisis, that is 2007 to 2008, forced closing of those positions, flight to safety, Japanese yen surge, British pounds weaken. This is what led to the collapse of Gbpjpy, and you can see it. So it's the monthly time frame simply it compresses this multi-year process of rising risk aversion and bank failure, recession, rate cuts, and disorderly exits of the largest leverage currency trade in modern history into a dramatic downward slope. It's very important to see that when the financial market is hit, it cuts across. So you see, Bank of America might be affected. Whatever affects Bank of America will affect the Bank of England in one way or the other. Everybody feels the effect. Finance is finance, they are interrelated. So this is what happens. And to keep it very simple, I believe that yen has commenced falling. Believe it or not, it has commenced falling. And if he fails here and gets into the 2007 2008 GFC era, I think it will be the final rest in peace. So save it for reference and keep an eye on this. And what happened before is what we'll see happen now. To keep it very simple, I expect that yen should continue to drop into demand. And at this level, I see a critical defense from the Bank of England at that level to try to salvage the situation. This is a monthly time frame. So I see yen cleaning the entire from 2005 high. The market will clean them and return here. So set your buy order. This is all financial advice. This is for educational purpose only. I see price dipping itself into here and we make a return. It depends on the level of intervention If the intervention is not strong enough, we could consolidate here, decide for a while, market to consolidate in this era. Either the market springs up to attend the 2007 GFC era and we see a massive drawdown, like the way you have it here. You see a massive drawdown, maybe into another structure at this area. This could be another area to wait for price on a monthly TF. I like structure at this area. Market could come into defense at this area. And if you see what price has done here, we have peaked interest here in 2023 after break of this demand floor, break of a demand floor followed by a retest sell, and break of a supply roof followed by a retest. And we have seen that bullish continuation. And to look at it from the ascending trend line connecting the weeks from 2020 with the other one, we're expecting that if we have a monetary policy intervention, price dip itself into this ascending trend line, that could technically set up a buyback at that level. But expect a falling knife for yen. Yen is coming massively with a very strong falling knife on a monthly TF. And I will tell you, be careful with buying British pounds this month. Just be very, very careful with it. The structure on a monthly time frame shows that price has come to a selling zone. So when price comes to a selling zone, as a smart trader who understands market structure, you have no reason going against a monthly resistance. No, who does that? Who goes against monthly resistance? You are doing so at your own risk. You are doing so at your own risk. So price could dip down into this ascending trend line, and somewhere around here, this could also be another area of defense. So price could stop here on a monthly TF. We have a monthly close here. So this can also be another opportunity that will salvage the situation if price is falling drastically under the intervention of Bank of Japan. So if we see that 203 also is capable of doing something meaningful, these are key areas that can stop price. But for now, look for opportunity Gbpjpy and sell only. Sell. Market has tapped into double confluence, a horizontal resistance structure and an ascending trend line, all acting as dynamic resistance to upswing. You have no reason to continue to buy Gbpjpy for now. And to close it, we look at the Lehman Brothers bankruptcy on September 15, 2008. Lehman Brothers was the largest U.S. Private, investment banker, and they really ran into trouble. And we must see it that Lehman Brothers is fourth largest U.S. investment bank, had about 639 billion in assets and 613 billion in liability. Let it sink. For a company to have 639 billion in asset and 613 billion in liability, it's almost like they are nothing. It was heavily exposed to subprime mortgage, commercial real estate, and complex derivative, especially CDOs and CDS. After bear stems were rescued in March 2008 and Fannie Mac were also taken into conservatorship in September 2007, confidence in Lehman collapsed, and we see it, and the government failed to rescue them. So it really affected the equity market, the credit market, the liquidity crisis, and so many other things. And that's how you see it. So we look at the impact of the on forex market. The Lehman failure accelerated a massive unwind of yen carry trade. Investors who had borrowed cheap yen to fund a higher yielding position, like a GBP, rushed to close their position and place sell. And you have seen price drop from here down because they closed position for long and turn short in order to save money. And you see price have dropped. So that's what it's all about. And every time the market faces a shock, there's always a counterbalance. Everybody want to play safe. So this is what I see technically. The falling life must continue, and it will fall itself into 203.473. And it makes sense to see how British pounds here will play out. And I'll tell you for free on a lower time frame, look for sell opportunity as you start the week strong. Bye for now.